Hello everyone and welcome back to the Clara CFO Group channel. Today we're going to talk about employee retention credits. Yay! Finally, you guys have been asking for this information, trying to understand whether or not you are eligible for the ERTC, and this video is all about an introductory to ERTC and really what you need to know and what triggers you need to know about just in case you are eligible, and what you need to know to be able to, go out and try to get these and claim these retention credits. So we're going to talk about ERTC, and it's the same ERC, ERTC. It's all basically the same acronym for the same thing. Employee Retention Tax Credit or Employee Retention Credits, they are the same thing. We had some changes with the Consolidated Appropriations Act. Well, kind of hard to say. Here we go. Consolidated Appropriations Act. Also, we've been talking about part of that Consolidated Appropriations Act was the Economic Aid Act. And with that happened on December 27th, 2020. It also opened up the potential for people who got PPP to also potentially take advantage of employee retention credits at the same time. Well, not at the same time. That's the thing. Take them both, but at different times. Okay, so what we're going to talk about is whether or not you are eligible, what you need to know, and kind of how to get some help through the process. Okay, so I've brought in an expert in the employee retention credit. So Brittany Malidore is joining us. She works for a CPA firm, Larson Gross, here in the Pacific Northwest, located in Washington. And they have a group that are kind of dedicated towards helping people with the employee retention credits and with PPP, but also on ERC. So I've brought her in because I think that the people who are actually doing the work and the people who are doing the work directly offer different insight than the people who are just studying it sort of theoretically, okay, or reading the guidance even. So I've learned a lot as I've helped people through PPP, and I think the people who are actually helping through ERC have a different level of insight. So I wanted to bring in an expert for you guys because I care about you guys. So, and I mean, this is just such an awesome opportunity that I want you guys to understand about it and see whether or not you are eligible for this credit. Okay, well, we won't take any longer to get started, but I do want to just say, if this is the type of information that's helpful to you, please go ahead and like the video and also subscribe to the channel so that you will be notified whenever we have new content coming out. Make sure you click the little bell too, because that's where the notifications come in. All right, well, let's go ahead and talk to Brittany. Brittany, thank you for being here. And if you could just give us, tell us a little bit about yourself and the firm that you're working for.
Awesome. Thank you so much, Hannah. It's a pleasure to be here. My name's Brittany Malidore, and I am the consulting director at Larson Gross CPAs and Consultants up in Bellingham. We have 3 offices in Burlington, Linden, and Bellingham. And I am just excited today to be here to talk about the employee retention credit.
Yes. Okay. Well, we're excited to have you because everybody's been asking about this. My channel has been mostly focused on PPP, as you know, and lots of people, we focused basically all of last year and most of the beginning of this year, trying to help people through the Paycheck Protection Program and claiming that, getting that, using it, getting it forgiven. But now with, I guess, the Consolidated Appropriations Act or the Economic Aid Act, that kind of opened up this new avenue for people to potentially take advantage of both programs, right? Because in the past, in 2020, or when the CARES Act first came out, it was sort of an either or, right? Is that correct? You either use PPP or you use employee retention credits?
Absolutely. Last year when the pandemic started, PPP and ERC were oil and water. Most businesses went with PPP because it was cash now, relief now. And I felt like the ERTC kind of fell under the rug a little bit, kind of skated through there. But you're correct. As of December 27th, 4 days before year end, the government had decided to make some critical changes to how PPP and ERTC play together.
Okay. And I think part of that really was that it felt harder to get help on ERTC, or maybe harder to understand whether or not you qualified for ERTC. So the PPP kind of, I guess, got a little bit more publicity, I think, and maybe just because it was, considered a grant, but maybe you could give us like high level ERTC or employee retention credits. We're going to say ERTC and ERC essentially interchangeable. It's either employee retention tax credit or employee retention credit, right? I mean, these aren't two different things, right?
Absolutely.
Okay,
Same thing.
Good. I know people have been a little bit confused about that, and we just kind of use a lot of acronyms sometimes, and we overdo it on the jargon. So maybe you could give us high level, what is the employee retention credit for?
Absolutely. So the purpose of the employee retention tax credit is to reward or provide relief to businesses who retained their employees during the pandemic. Now, PPP also had a component of that, right, with the FTE calculation. But the employee tax credit was a credit that allowed in 2020, if you had an employee up to $10,000 of wages paid, you could receive a $5,000 credit. So it's a tax credit based on the wages that you paid an employee, and then you're allowed to offset it on your payroll tax deposit if you took it in real time. So that would be represented on your 941.
Okay. And just to kind of clarify on that. So your 941 is where you're doing quarterly. That's where you're essentially, as you run payroll, you're collecting taxes and then you're paying them to the IRS. But then the 941 is kind of that quarterly report that you sort of do your like sort of tax return, right, on those employer taxes. Is that right? So this is not talking about a tax credit from a federal annual perspective. This is not like your annual taxes that you do every year with your CPA. This is where you're doing those employment taxes on a quarterly basis. And that's typically, if you don't have somebody running payroll for you, it might be done by your payroll provider. Is that right?
Yep, absolutely. So depending on your industry, this credit will be reflective on a 941 or 943. And so those returns are a reconciliation of your employer and employee portions of Social Security, Medicare, and federal withholding. And so, yes, if you process your payroll by yourself or internally, then you're filing these quarterly. If you have a third-party provider doing it, such as ADP and Paychex, they would have filed these for you. And so the form was revised last summer from its original state to include, as you know, the FFCRA, which is the Family Cares Act, sick and paid leave credits, as well as the employee retention tax credit too.
Okay, let's see. So the employee retention tax credit, it goes in the 941s. What we're seeing though is, so there might be a tax liability there, but when people are claiming this credit, it's excess of really what they owed in taxes. So tell us about that portion of it.
Yeah, absolutely. There was a small portion of businesses that really took ERTC real time. Most of those businesses were ineligible for PPP and used it kind of as a secondary relief option because PPP didn't work. And so how the credit works is it's calculated based on wages on your 941. And then when you look at worksheet 1, as you're working through it, you'll see that it offsets your employer portion taxes first, and then it allows the rest to be refundable. And so it's a cumbersome calculation that at the end of the day just reduces the amount that you would owe to the IRS. And so if you took it real time and you used a third-party payroll provider, they did that calculation for you. So you may have noticed that your tax deposits that you have to send in either semi-monthly or monthly were reduced, or they may have retroactively gone back, say that quarter, and amended it for you, and then you would have gotten a credit.
Okay.
As of December 27th, 2020, though, remember they were oil and water, and so it opened up a whole new world for businesses right as the year ended to go back and amend, which is something that we can talk about today.
Okay. Yeah, I definitely want to talk about that because I know a lot of people are really interested in understanding like, hey, can I get some type of relief even from wages I've already paid even into last year where, so we're definitely going to cover that. So stay tuned, you guys. Okay. Okay. Just another quick question on how these kind of the tax credit works. So let's say you said real time, either somebody's taking it real time or potentially they're going back and claiming it maybe retroactively. So, for example, we're going to talk about 2020 and where, people might be eligible for that. But let's just say like real time, you were taking it right now. That would mean you had gotten it set up potentially with your payroll provider. And so they were just not remitting taxes that could be due for, on those semi-monthly or monthly basis. So they would just essentially not paying those taxes because they knew you were eligible for credits. And then when it comes to filing the 941s, it's just showing, hey, you don't have that much tax due. Or if you potentially were qualified for these credits and you still didn't pay in any taxes, you could even get a refund over that. That's kind of what I'm seeing, right? So maybe you had a tax liability, you would have had a tax liability, let's say of $25,000 for the quarter, but maybe with all these employee retention credits based on your qualified wages, it could have been $35,000 of credits. And then you would get essentially the difference back, whatever, was due plus the credit or minus the credit that you could get back in a refund. Is that correct? We are seeing refunds coming back on employee retention tax credits.
Yep, you're not refunded more than what the liability is, but remember, it goes back to a wage calculation. So if you paid an employee, let's just say you had one employee, $10,000 wages, when you're filling out your 941, you're going to get a credit back, yes, of $5,000 because it was 50% of a total $10,000 wages paid in 2020. Okay. Yes, so it depends on your employee's federal withholding, your Social Security, and your Medicare. And so, yes, sometimes you can see an excess because the credit is 10,000 wages, $5,000 in credit. Okay. The goal was that to reduce the cash flow that businesses had to send out during the pandemic. And so saying, hey, you don't have cash, so let's give you a credit that helps offset, but you're still getting credit for the employee's portion, right? So it's just kind of a play on numbers of where it puts it on the 941.
Right. Okay. All right. Well, maybe that's a good time to maybe talk about 2020 ERC versus 2021. Can you give us like a high level explanation on the two?
Yeah, absolutely. So as I mentioned, on December 27th, the government went back and said, hey, we used to say that PPP and ERTC is oil and water. Now we're going to allow you to do both. But the number one thing is you can't double dip on wages. Mm-hmm. So PPP and ERTC are based off of gross wages paid to employees, as well as some other benefits. So when we look at 2020, businesses today should be going back and they should be asking themselves some key questions. So if you had PPP, did you file forgiveness yet? If you haven't, there's a great opportunity for you to optimize the wages that you can allocate to PPP to receive forgiveness and to maximize a potential, credit back on ERTC. So in 2020, if you paid an individual $10,000, as I mentioned, you're eligible for a $5,000 credit. Mm-hmm. What we're seeing businesses right now is that it's a little confusing because their PPP has already gone. They're maximizing forgiveness. And so what we created were flowcharts to help clients and said that if you have do you have remaining qualifying wages? Mm-hmm. So that is the question that we ask clients right away. Maybe they don't have 60% of the amount for payroll for PPP forgiveness. So then we wouldn't want to take any of those wages for ERTC. Right. But a lot of these businesses, believe it or not, they did an amazing job retaining their employees. Mm-hmm. And so oftentimes they do have excess. So as you're going through loan forgiveness, if your CPA or even yourself says, yes, I don't need 100% of Susie's wages, I only need 60, then let's look at that 40% and see if we're eligible for ERTC. Once you've done that step, then we can roll into the actual eligibility because our firm said, hey, we're going to make loan forgiveness first priority.
Okay. Yeah. So let's just kind of give a practical example of that. So I was helping a lot of people through the PPP forgiveness process, and we were looking at, we were even saying to people like, hey, try to just include in your forgiveness package, obviously you probably used 100% of your money on wages since they got the money and they could use it for 8 weeks. But then the original covered period was 8 weeks, but then it was extended out to 24 weeks. So a lot of people were just going and saying, well, I'm just going to use all 100% payroll to apply for forgiveness. So they might have used 12 weeks of, 12 or maybe even longer, maybe even 20, maybe even 24 weeks of wages to go ahead and apply for forgiveness. And then they didn't include rent, utilities, or any of the other non-payroll costs. So let's say somebody used, maybe they already applied for forgiveness. They already did it. It's already submitted. Maybe they've already even been forgiven on their PPP. Let's say they use like 12 weeks of their, money to, cover that. What does that mean? What other parts of the year can they potentially look at as being eligible wages? We could look up dates if we want to, but let's just say like May, June, and July, just to make it easy. Let's say May, June, and July were all covered by PPP wages because those were in their covered period and they applied for forgiveness, and that's all PPP. What other kind of options do they have?
Absolutely. So we would go to the next phase of eligibility. So with the ERTC, there was 2 ways for you to get the checkbox yes. One is you had to have a business fully shut down or partially shut down by a government official. So the most recent notice really clarified what that shutdown looked like. So it'd be like the one that came from the Washington State Governor's Office. And so if you were affected by those, either one of those, then you were eligible for the period of which you were shut down. And so that looks many different ways, right? I mean, think about how the interpretation of partial suspension could be, right? So if you have a nominal portion of your business, such as a restaurant with dine-in, that could qualify you potentially on a partial shutdown. Or if you were a part of the group of businesses that had to fully shut down, you would be eligible for ERTC in that window. But let's say for your example that window fell when you took all PPP wages into account. So really that's not an option because we can't double dip. The second qualifier I would do is there's a gross receipts for qualification that can start effective March 12th of 2020. Okay. And so in order to be eligible under gross receipts, you had to show a 50% decline to the previous quarter. So think of, in your example, Q3 2020 to Q3 2019. And so if you showed a 50% decline, then you were eligible until which point you met 80% of the sales. So you came down to a 20% reduction. Okay. And so that's how ERTC works in 2020. Either you can qualify for the period you're fully or partially shut down, okay, or you can qualify at a point where your gross receipts drop to 50% compared to the previous quarter, and then they increase back up until your 20% decline. And you're eligible typically for that quarter.
Okay, so let's give some kind of concrete numbers here. Okay, you didn't talk about Q2 at all in that scenario because in the example that I gave, we were talking about May, June, and July. And we are talking about calendar quarters here. Same with PPP, calendar quarters. So we don't have the option of like doing this modified quarter, which I think is a big question a lot of people have. Or even if they're on a different fiscal year for reporting, they still can't move that, correct?
Right. Okay. That's correct. Calendar quarter with the IRS.
Okay, so we did not even talk about Q2 in that example because April was before PPP, and so we can't include any April wages in that example. Or could we go back and look at just 1 month? Is that like a partial month within the quarter?
Yep, you can look at, so in your example, to break it down, you could look at March 12th through March 31st if you had a government shutdown is typically what we're seeing is the cleanest. Okay. And then you can skip the months that you had PPP, but you still need to do the quarter qualification. Okay. So in your example, if you're doing April, May, June, and you're saying that's all PPP, then I would just skip that quarter and go to July. But you still have to qualify, aside from the first 2 weeks in Q1, you still have to qualify the quarter itself, that you have a gross receipts decline.
Okay, let's say you had a gross receipts decline, or let's say you had a shutdown, and maybe you shut down because of health guidance as of April 1, but maybe you didn't have a gross receipts decline. Could you have a shutdown qualification and then a gross receipts decline qualification for ERTC? So we could kind of combine the two. Is that a potential, or is it kind of you qualify one way or the other way?
So it's not an and, it's an or. So you can qualify by a partial or fully suspension shutdown. Remember, that one is for the period of which you're fully or partially shut down. Okay. Or you can qualify on the quarter. So many businesses that were fully shut down ended up meeting the gross receipts as well.
Yeah. It's kind of likely if you can't produce revenue, it's probably means that you are not, collecting. Okay. So then we're going to Q3, and let's say we have that gross receipts decline of 50% in Q3. Maybe my business is not shut down anymore at that point, but I still have the gross receipts decline. In that case, can I still claim those wages for August and September as qualified wages for ERC? In that case, even though I'm kind of into the quarter because I used until July 31st for my PPP wages?
Yes, you can. So ERTC and PPP, the biggest things you want to watch out for is no double dipping. And as of today, the IRS has not said that you can't use them in parallel or front or back. Okay. What it states is that you have to make sure you meet all the eligibility on both sides, no double dipping of wages, and you really document that, hey, these wages were to PPP, and then maybe August, like you said, August 1st through September 30th, those are ERTC. And so, yes, you can use them in that quarter. To your point, we have many clients who did the government shutdown first, the PPP window, and then they also did ERTC either in parallel or behind. You just have to make sure you're eligible. You just want to make sure all those boxes are checked.
Okay. So we're seeing, what this is saying to me is like, it's worth looking into. It's certainly worth looking into if you think you might qualify for one of these tax credits, because, knowing the rules like this can mean the difference between claiming thousands of dollars in tax credits back versus, potentially leaving some of this on the table. And again, like to your point of like this program was put together essentially to help small businesses with cash flow. And, if you're able to potentially go back and claim some of this money, this could be, money back in your pocket that you could be using for operations, or you could be using for lots of other things. So I hope everybody who's watching at this point is really clear that like, this is a program that is worth investigating. It seems too complicated, and a lot of people are just putting it off. A lot of CPAs were just saying like, nope, don't do it. I don't do it. Like, talk to your payroll provider. So I'm really appreciative of you kind of walking us through this. So then kind of in our example that we were talking about, Q3, let's say we had that 50% revenue decline in Q3. What happens if Q4, maybe I didn't use all my qualified wages at that point. I still, I haven't reached $10,000 for a lot of my employees. Maybe a lot of my employees are hourly people, and they're kind of on a, more minimum wage. I haven't paid out $10,000 of qualified wages yet. It's Q4, and I have a 30% revenue decline rather than a 50%. Can I still qualify at that point?
Yep, because remember, you qualify at which point you have a 50% decline until you've recaptured 30% of that and only show a 20% decline.
Okay.
And so, yes, you are eligible through, say you had, you never got back up to 80% through 2020, then you are eligible throughout the entire year or the period that you qualified. And then, like you said, you can continue to accumulate the qualifying wages quarter by quarter.
Okay. So, and then we're still talking about in that Q4 example, I would need to be 80% of my wages from 2019 in Q4. Is that right?
So you're eligible until which you're at that point. So as long as you are less than that, you are eligible. And then that ruling ceases on 12/31/2020.
Okay. Well, that's perfect because my next question was, well, what about ERC 2021? You want to tell us about
Yeah.
that one?
Yeah. ERC 2021 is literally probably a once in a lifetime payroll tax credit.
Mhm.
So remember in our example, we've used $10,000 for the entire period of 2020 for a 50% credit.
Mhm.
2021 is you can take up to $10,000 of wages for a 70% credit. So now you're $7,000. And so you can imagine now it's by quarter. So now you have an employee where you could potentially, remember there is a PPP 2.0, so the same rules apply, no double dipping.
Mhm.
But now you can get up to a $7,000 credit per quarter per employee versus remember last year was a $5,000 credit per employee for the year.
Oh my goodness. So this means that I could pay an employee $10,000 in Q1 and then $10,000 in Q2 of qualified wages or, $10,000 or more. You could have somebody that's, getting $10,000 per month, but up to, $10,000 that would qualify under ERTC. And then I can get $7,000 back. Is that what you're saying?
That's what I'm saying. If you pay them $10,000 per quarter, and let's just say for ease, none of it is attributed to PPP, you can earn a $7,000 credit back. And so this credit, 2020 is definitely worth looking into. It's maybe smaller potatoes, but if you have full-time employees in 2021, this is worth looking at. I mean, they also were very hopeful that they're going to extend into Q3 and Q4, but that's just a large amount of money for small businesses. And there's a couple ways you can claim the credit. So if you know your wage calculations ahead of time and you're on it, you can file a Form 7200 to get the money ahead of time, and then you reconcile on your 941. Or you can do what we did in 2020. You can take it real time, or there may be some amending we can do because PPP is still open. And so businesses have been a little gun shy on pulling ERTC until their PPP loan amounts come in.
Okay. Oh, well, we haven't really talked about how we're eligible for ERTC or 2021. Can you tell us there's a gross receipts decline, is that right?
Yeah, so 2021 is the same. So you can qualify based on a fully or partial shutdown, and then you would be qualified for that period. And then if that does not work, right? So say your business pivoted and you weren't able to be shut down, then you have to have a 20% decline. So they made it a little more gracious in 2021. And so if you have a 20% decline and you're going to want to compare to the comparative quarter of 19.
Yeah, so we're going back 2 years. We're going back 2021 comparative to 2019, which is kind of
they're letting you go back to hopefully a better year to show a worse decline. But there's a couple ways that you can qualify in 2021. So in 2020, we just said current quarter to 2019. In 2021, you can do estimated Q1 to Q1 2019. So estimated Q1 2021 to Q1 2019. If that doesn't work, you can then do a Q4 2020 to Q4 2019. So there's a couple different ways you'll want to work with your CPA on the strategy of getting you to qualify. Because this credit is a once in a lifetime, and they really are trying to make it so that businesses can take it. So there's multiple ways to get you in there.
Okay. That's really good to know. Cause I think, I think that's just kind of puts another emphasis on find somebody who will help you walk through this, because it's worth time seeking out a CPA firm that will help, or like a CPA who understands this, because that strategy piece, and that's what we're seeing with PPP forgiveness as well. If you understand enough of the rules, you can figure out how to maximize the program when it comes to, forgiveness. So I really like the idea of, finding somebody who understands both PPP and ERTC, that you can, figure out how to maximize these programs, because this is tax strategy is a matter of like a tax strategy, and this type of strategy is a matter of, using these programs for what they're intended to do. It's just understanding the rules enough so that we can, figure out the benefit for the company. So, I mean, you're going to be paying probably a couple $1,000s in fees, kind of depending on the size of your business or whatnot for these firms. But if it could come back to you multiple fold, it seems like an incredible investment for your business. I think, and I know sometimes like on YouTube, people are trying to get enough free information so that they can go and try to do it themselves. And, if you can, great. Like, we're all for that. If it's something that you can go and you feel confident enough and you can go and do, but just know that there are professionals out there that you can go and find to help. Okay. PPP 20, or not PPP, let's go back to ERTC 2021. You mentioned something about full-time employees. Is it okay if somebody has part-time employees? Like, are part-time employees eligible for ERTC as well as full-time employees, or does that matter?
It does matter. So this complements your previous statement really well. So today we're talking really high level, simple business. When we really get into ERTC, there are FTE limits. You had to have less than 100 employees in 2020. If you had more than 100, there's an additional piece to the calculation. In 2021, you had to have less than 500. If you had more than 500, there was additional piece to the calculation. And then take it one step deeper. Yes, there are requirements based on FTE. And so there's an hour component for each of the employees, also what type of work they're doing. So similar to PPP, we have to look at the individuals, the type of employee that they are, as well as the hours that they work. And that's, Hannah, where the strategy really comes in, because on the surface, ERTC is a simple credit for simple businesses. As businesses introduce owners, right? Think of S corporations where they have related entities, they have multiple lines of business. There are some additional parameters that we do have to look at. But yes, traditionally, I believe that the ruling says 30 hours is what qualified for the FTE for ERTC.
Okay. So we're thinking, like, if somebody was potentially paying lots of employees, maybe their employees averaged about 10 hours a week or something, are we thinking those wages are probably not qualified under ERTC?
Right. So for the purpose of ERTC, a full-time employee was defined as working at least 30 hours per week or 130 hours in a month. Okay. And so, yes, there is a requirement for the FTE calculation.
Okay. So, okay, that's going to be kind of important to know, because that's something that I don't think a lot of people have been talking about. It's just been wages in general. So whether or not you've paid somebody, $2 in a month, or you've paid somebody $20,000 in a month, we haven't really talked specifically about the hours requirement. So that's super helpful to understand which employees' wages might even qualify under ERTC. So
absolutely,
that's good. Okay. Maybe let's talk a little bit about owners in the last couple minutes that we have here. Are owners allowed to pay themselves with ERT? Well, I guess not pay themselves. This is different than PPP. Are they allowed to claim a tax credit on their wages in your S Corp example? Because S Corp.
Yeah, that is a great question. And it was the highlight of my week last week. As many of you know, the IRS came out with a new notice that gave us more colorful definitions and examples to the 2020 ERTC. It feels a little intentional, but there wasn't much guidance on owner wages. So as many of you are probably reading on Google, the firms are taking stances one way or the other. So are owners eligible, are owners not? And so us as a firm are working through that actively right now on where do we want to advise our clients. Here's the thing. There's nothing in the ERTC that disqualifies the owner themselves. It typically, in the FAQs, particularly on number 23 and 59, it focuses on related employees to the owner being disqualified. So there's nothing yet currently that states an S Corp owner is not able to take their wages, but there is some uncertainty as to how those FAQs were written if we are eligible for the owner. What we're seeing is a majority of firms are saying, yes, the owner's wages are deductible, but they're fully disclosing to their clients at some point the IRS could come back and say, no, the interpretation was meant this way. At this time, we do have clients that we have had that discussion with, and we are deducting the S Corp owner wages. You just want to be really careful on those related individuals. So if you have a dad that owns the company and pays their son full-time, work with your CPA so that you can fully try to document and have, substantial evidence that you can take a credit on those wages.
Yeah, I mean,
but it's a hot topic right now. We were very hopeful.
Yeah. I've been seeing a lot of questions on that too. So, I mean, probably, so we have a lot of people who are watching the channel who might be an S Corp, but maybe it's only them on payroll, or maybe just them and their spouse, or maybe it's, maybe just one other employee. So in those situations, it's looking a little bit like, especially if you're a one person shop as an S Corp paying yourself on W-2 wages, maybe, this is where that strategy goes. Maybe it makes more sense to maybe try to pursue PPP if that's something like, if we're, you might be potentially running a risk of claiming your credit, but then having the IRS come back and say, no, that's not what we meant here. Because remember, it's more about keeping employees retained. The owner, so that's where it just gets a little bit, that's why we hear, and this happens a lot in the CPA world, where we're trying to interpret tax guidance from the IRS, and that we get lots of variety of interpretation sometimes. And so, you're going to have maybe a little bit more conservative interpretations, and you're going to have a little bit more liberal interpretations sometimes. And that's kind of based on risk tolerance. So we're not advising here, everybody. We're not giving advice. We're saying go and talk to your professionals of what makes sense for your situation and your company in particular. And, really try to think about how you can optimize all these different programs.
Yeah, I hope today's conversation just sheds light on that there's an amazing credit here, but each business owner's situation and scenario is very different, and some are complex even when their businesses are simple. And so I hope today helps people to understand that, hey, there's a chance to go back and get some money. There's also a chance to get more money in 2021 alongside your PPP. I mean, we're seeing ERTC credits in the millions, and that's including businesses who got the PPP. So to your point, there is a conversation that should happen with their tax CPA or their consultant or whoever they're working with, then get into the nitty gritty. But there is some risk here specifically to the owner topic. As we've already mentioned, some firms have taken a very conservative stance. Some firms are a little bit more liberal, and they're saying, well, based on my interpretation and my experience, this is what I'm seeing. So I would, just want to echo, everyone's situation looks different. So I hope you walk away today with, hey, this looks great. Let's have a further conversation. Because there are some nuances when we start getting into what are partial shutdowns, right? What is a related party? Do I have to aggregate my businesses? So there is some complexities in the inner layer.
Definitely. Awesome. Okay. Well, Brittany, this has been so helpful. Thank you so much. I think
you're welcome.
Have a lot of questions from it, but I think it's probably going to shed a lot of light too. Just from people, there's a lot of hearsay on this stuff and a lot of chatter, but we really want to just try to get, what can we do on a really practical level? So I really appreciate it. Maybe if you guys have more questions and whatnot, maybe Brittany will come back and answer some of this for us. So,
really appreciate your time. And then we're going to put in the description box below, we're going to make sure we have your contact information and the firm's contact information, because you guys are helping people through this right now, right?
Absolutely. Yeah. So feel free to email me with any of the questions you have. We'll respond as timely as we can. We try to turn around in a day or so, but our firm is actively posting ERTC updates. We do several handouts for clients too, so that they can feel educated. And we also have content on the interaction between PPP and ERC. So yeah, if anything, we're posting those on LinkedIn and our website. And so if you want additional, more tangible information, happy to check there.
Awesome. And we'll, I think you have some really awesome links to some specific resources. So I'll put those in the description box below too. So people don't have to like search too far for them, and then you can get connected that way. So I'll make sure to link up as much as I can in the description box below. So, well, Brittany, thanks again so much for being here. We really appreciate it.
You're welcome. Thank you, Hannah.
Okay, well, wasn't that so helpful? I mean, even as I have been working with lots of clients, like I had lots of additional thoughts and things that are triggered. And now I can think through more which of my clients might be eligible for ERTC that maybe I didn't think about before. But also just, you know, as you guys are having questions now, hopefully I can help direct you guys in a lot of better ways as well. So please make sure you put comments in the comment section below. We will potentially put together some type of Q&A session if we have enough really good questions that we can go and try to answer for the masses. So thanks so much to Brittany again for being here, and thanks to Larson Gross. Please make sure you check out the description box, because we're going to have a lot of resources there for you, specifically around ERTC. All right, thanks so much, you guys. Talk to you later. Bye.